It has been a roller coaster season for crypto this year, just a few more weeks to wrap up the year. At the beginning of the year, there were many expectations, especially for Cardano ADA, which failed to climb back up to its all-time high in 2021. Even crypto exchanges suffered. Perhaps investors should not have set their hopes on stakes at all, given the turnout of the year. But there might just be a silver lining at this period of the year that is perceived as the 11th hour. Coinbase CEO Brian Armstrong recently said that the crypto industry can finally close the chapter on a litany of scandals and problems after Binance was hit with an historic settlement by the US Department of Justice in an interview. The enforcement action against Binance that's allowing us to kind of turn the page on that and hopefully close that chapter of history, Armstrong said. He added, "There are many crypto companies that are helping build the crypto economy and change our financial system globally, but many of them are still small startups. I think that regulatory clarity is going to help bring in more investment, especially from institutions," he added. But what happened to Binance? Binance was hit by the US Department of Justice with a $4 billion settlement, which saw its founder and CEO Changpeng Zhao step down and plead guilty to charges of money laundering violations. The government accused Binance of violating the US Bank Secrecy Act and breach of sanctions on Iran. It has been a whole lot recently. In an interview, Armstrong pushed back on the suggestion that crypto is mainly used for nefarious purposes such as fraud, money laundering, and terrorist financing, a common refrain from financial firms that have avoided jumping into the space due to compliance concerns. He finally conceded that some players have been bad actors, referring to the case of Binance as well as the collapse of crypto exchange FTX and the conviction of its founder Sam Bankman-Fried on charges of fraud. One of the main reasons why the SEC went hard against certain cryptocurrencies was because of the numerous unpleasant activities going on within the crypto market. The collapse of the FTX exchange was a good example, and this is why the SEC swung into action this year. However, so far, investors have had a fair share of what it means for the market to be regulated by the SEC. Amid the most recent attack by the SEC, Coinbase International Exchange, the offshoot of Coinbase Global Inc., catering to clients outside the United States, announced its plans to list perpetual futures contracts for 4 new assets, including Cardano ADA, Chainlink Link, Dogecoin DOGE, and Stellar XLM. As unveiled by the trading behemoth, the 4 trading pairs for the 4 assets will be listed by the end of December, thus setting the grounds for its clients to embrace these new digital currencies, provided the liquidity conditions are met. According to reports, pairs ADA Perp, Link Perp, Doge Perp, and XLM Perp markets will go live on the Coinbase International Exchange and Coinbase Advance, respectively. So this listing places the 4 new cryptocurrencies alongside Bitcoin, Ethereum, and XRP, among others that have been listed since the platform was launched to serve non-US customers. I mean, this is a good development, right? With the relatively unclear regulations that bind Coinbase users in the United States, the exchange had to explore a different way to serve its non-US customers the right way. This was the motive that birthed the move. The latest edition of ADA, Link, Doge, and XLM form a strategic expansion move that can reach more traders in the broader digital currency ecosystem. But there is one question. What influenced the choice of the listed assets? Well, the choice of these assets was an easy one considering their unique value propositions and dedicated community of followers. When it comes to these qualities, Cardano ADA is always a good catch. While Cardano has made headlines thus far this year for its innovation and dedication to development efforts, assets like Chainlink have continued to expand its reach as the de facto Oracle server provider in the industry. Meanwhile, the duo of Dogecoin and Stellar also have their unique appeal and audience, making them the right pick for Coinbase International Exchange listing. The regulatory provisions were also considered. Besides Bitcoin and Ethereum futures, Coinbase also supports XRP futures on its international platform, a move that came after the digital currency earned the status as the only altcoin that cannot be tagged as an investment contract in the United States. Interestingly, the status came after Judge Annalisa Torres' ruling on July 13th. Many called it a partial victory, but it is a verdict that is currently the law regarding the coin in the US. Matters concerning the approval of spot Bitcoin ETFs do remain. The fact that these ETFs could launch the crypto market into a life-changing season is a big deal. Even crypto exchanges are not left out. Recently, there have been talks about it, but the SEC is yet to make their move. David Duong, head of institutional research of Coinbase Institutional, also a branch of Coinbase, explained that spot Bitcoin exchange-traded funds could take Bitcoin further into the mainstream, putting it within reach of millions of investors in broker-dealer, RIA or Registered Investment Advisor, and tax-advantage account structures. He continued, in the long run, spot Bitcoin ETFs could add billions of dollars to the total crypto market cap, as well as spark new potential investments for the asset class. While this will take time, we expect ETFs to lay the foundation for a more regulated environment, greater inclusion, and a material growth in demand. While SEC Chair Gary Gensler remained quiet on prospects of spot Bitcoin ETF approval, His recent post on X raised speculation of a forthcoming approval. He made a video post about the SEC's Division of Trading and Markets, which is in talks with spot Bitcoin ETF issuers. This made people speculate about a forthcoming approval. This time, it could make sense to stay hopeful. The post came amid the SEC BlackRock meeting and the SEC's decision on Franklin Templeton and hashtag spot Bitcoin ETF applications. Even Bloomberg senior ETF analyst Eric Balchunas agreed that the timing is perfect, and the SEC has done this for every division at this point. He said it's not as big as a deal as there are other legit signs indicating a forthcoming approval. He added that BlackRock met with the SEC Trading and Markets Division again and presented them with a revised in-kind model design based on comments at their prior meeting. Commenting on the video, Van Eck and Tether advisor Garber Gerbach said, "Having to rely on reading tea leaves and tweet sequences from a single man does not sound like a free, functioning, or optimal capital market supervision structure for the largest market in the world." Despite over 30 meetings with the SEC in the past 18 months aimed at gaining regulatory clarity, cryptocurrency exchange Coinbase was hit with charges in June for operating an unregistered securities exchange. This came after the company received a Wells notice for potentially breaking securities laws from the regulator in March, signaling an intention to bring legal action against the crypto company. Interestingly, everyone expects a wash of relief after the approval of spot Bitcoin ETFs, but will this drive away the charges that the SEC has bedeviled against cryptocurrencies and crypto exchanges? In a Decrypt interview, Coinbase CEO Brian Armstrong expressed frustration over the charges. He mentioned how his company had provided a lot of clarity to the SEC and has made a couple of efforts to defend its stance while the commission is not making matters easier. He said his crypto exchange presented extensive legal rationale and continuously sought guidance on which crypto assets the SEC considers securities, and so far they have only received confirmation on Bitcoin. The SEC had earlier alleged that tokens such as Solana, Cardano, and some others listed on Coinbase qualify as securities under criteria for investment contracts requiring proper registration. However, Coinbase disputed this interpretation, arguing that the assets do not constitute securities. This unveiled a lot of issues around how they should be classified. The parties that have also appeared in court at different times to explain and defend their stances. Moreover, in a series of tweets, John Deaton, a pro-XRP advocate, shed light on potential conflicts of interest within the SEC. He examined the actions of former SEC Chair Jay Clayton and the SEC's approach to cryptocurrencies like Bitcoin, Ethereum, and Ripple. As the primary regulator of the US financial markets, the SEC is increasingly involved in overseeing the cryptocurrency sector. Its decisions hold significant sway over market dynamics and the legal status of various digital assets. John Deaton pointed out that during Clayton's final days in the SEC, a significant enforcement action was launched against Ripple, alleging that XRP was sold as an unregistered security. This case dragged on for a couple of years. Recently, some had criticized this move as selectively targeting Ripple while giving a free pass to other cryptocurrencies like Bitcoin and Ethereum. Well, this is exactly what the Cardano founder, Charles Hoskinson, is fighting for. He believes that the SEC is coming after ADA vehemently without considering Bitcoin and Ethereum. But which argument is valid? ADAs or XRPs? Coinbase's international move was an interesting one, but the crypto market is not yet in shape. A silver lining? Well, perhaps we are so lost in the storm that we can't see one just yet. But that's going to do it for today's video. Make sure you subscribe and hit the notification buttons, and we'll see you in the next video.